Hey, what's up guys? John here, standing on a golf course, and I'm going to show you what's happening right now in America and give you a full tour of what I think is going to be the hottest real estate market in this country in 2025 and 2026. Show you homes that if you were in your city, they would be $5-10 million. If you're in Beverly Hills, north of Sunset, they're 20-30 million. These homes you can buy for the cost of the median priced home in this country, between $400,000 to $500,000. You're talking 6,000 to 7,000 square feet, sitting on an acre, overlooking a golf course. You bring your friends over there, they think you sold a tech company, founded some new robotics company, or had some major exit. But in reality, you're just an everyday American buying an everyday home. But this is the shift we're gonna be walking through right now in the economy. So $620 billion worth of debt, credit card debt, gets rolled over every single month because US consumers cannot afford to pay off their balances. You have a 990% surge in multifamily delinquency debt. New York Community Bancorp Bank just reported this. What's happening right now in commercial real estate, what's happening with the job market, what's happening with consumers is going to shift how people live and where people live. And I think it's also going to change every industry in this country. And I'm going to talk to you as I climb this hill to show you this neighborhood, the industries that I think are going to really explode. So one is going to be debt relief. The debt relief industry is going to pop off, no doubt about it. Drug rehab facilities, sobriety houses are going to explode in popularity. My prediction here, as the job market changes and the world gets harder, people generally relapse. They look for an out. They want to kind of escape. And they do that through drinking and drugs, right? And I think the government's going to subsidize a lot of this with insurance companies. And they're likely going to be offering antidepressants and all these different solutions to the people inside these homes. And the people that own these properties or sublet these homes are going to be able to capitalize on it. Some of the returns from these investments are unreal in the sobriety business. But you just start to look at this. You're like, all right, well, plant-based foods is going to be another one. It's going to be probably harder to break into that industry. But the robotics, tech, all going to be very popular. Anything around health, wellness, these industries are going to get more and more attention. Look at how the world's changed the last 4 years. People are looking at their health way more closely today than they were 5 years ago, right? Way more closely. And the other thing people are looking at is crime, where they live and where they raise their kids. Where I am right now, this area, almost no trash anywhere. I've seen more homeless people in 1 block radius of downtown LA than I've seen in this entire city. Explain that. Now, many people will say, look, John, it's Ohio. It gets cold. I've seen in the comment section. It gets cold in Ohio. It also gets cold in New York. It gets cold in Maine. It gets cold in Jersey. It gets cold in Boston. All these places have seasons, right? Nothing wrong with it. Now, some people will say, look, there's more job opportunity in those cities, and that's why there's high home prices, because people want to live there. Look, they just built something around the corner from me right here, and it looks like the Grove, in LA. Rick Caruso built it. A phenomenal, indoor, outdoor type of shopping center with restaurants, and it's a beautiful spot. They just built something right around the corner, brand new apartments here. So the attention is coming here. Investors are looking at how they can invest in this changing world. And I think Ohio, and I'm not just, saying Ohio is the place, there's other markets, right? But I'm saying people are gonna be looking for yield. They're gonna be looking for affordability, and they're gonna be looking for ways in which they can cash flow. And one of the biggest ways, I think, is gonna be Section 8 real estate investing. I think the government's gonna subsidize a lot going forward. And I think the money printing that we've seen, the $1 trillion we're basically printing every 100 days will pale in comparison to what they're going to be printing in the coming year, 2 years, 3 years. Look at that house. Beautiful. And that's only half of it. I'm going to show you over here. It's probably an acre. Look, Cadillac Escalade, brand new. Right? Where's the trash? Right? Where's the crime? $500,000 houses. It's unbelievable. For $500K, what are you getting anywhere? Any big city, you're getting a tiny studio 2 blocks away from Skid Row for $500K, where you and your wife or your husband or whoever it may be cannot go outside after 9 o'clock with a baby and walk around, right? That's what you're getting here. Look at this. Now, what I think is going to happen here, in addition to that, look at that. That is beautiful. Imagine you have your friends come over, like, oh yeah, well, let's go golfing. Meet you at the step, go inside, having some mimosas, Bloody Marys on a Sunday, right? And we'll go golf. That's what you're getting for the average price home in America, where I am right now. So what I think is going to happen is they're going to continue to inflate and inflate and inflate the money supply. Those with assets are going to benefit. Those in the right industries are going to greatly benefit, and those that are savers are going to be the big losers. And they claim about 80% of all USD the last 5 years, since 1776. So the money printing's not going anywhere. Look at that. It's old money here. This isn't an FHA buyer doing that. This is old money. And these older properties, people live here 20, 30 years, right? 20, 30 years. And they're obviously taking care of their neighborhoods. And yeah, this is what you get. So my prediction is we're going to see a lot of people leaving big cities. We're going to see a lot of people losing their jobs, and they're going to want to maintain their lifestyle as they try to find a new job. And they want to put their kids in a good area. A lot of people are going to want to invest. A lot of people are going to want to change with the times. Now, when you look at how many people have come into America the last couple of years, you know, the estimates are 8 all the way up to 10 million. Some are saying more, whatever the number may be. If you take that number plus the growing unemployment rate, and then you could see a situation where millions and millions and millions and millions of more people are going to need subsidized housing. Now, I've seen the comments, some people say, look, the government's they're going to want to buy the homes and this and that. If you were the government, would you want all the homes, or would you rather essentially control the flow of people inside of houses and the checks? Because then you don't have to manage them, you don't have to repair them, you don't have to deal with any of the headache, any of the stress, you don't have to deal with any of it. That's my prediction. I don't think they're going to want to deal with any of it. I think they're going to want to pay somebody or a company to subsidize housing in different areas. And the Section 8 voucher program is going to explode. And how is that going to get funded? Increasing taxes. And so who are they going to increase taxes on? You think it's going to be the big companies or the small mom and pop businesses? It's going to be the everyday American that gets increased taxes. They're going to be the ones that are getting hit. It's not going to be the big corporations. Big corporations are set up with offshore asset protection trusts. They have companies set up in Ireland and different countries to shield themselves from taxes. They're not going to be the ones paying. It's going to be the everyday American that's going to be hit with inflation and increased taxes. And so if people are just sitting there saving, it's going to get a lot harder to buy. Point blank, it's going to get a lot harder to buy. And those that are investing, there's going to be so much more cash out there chasing investments that in areas that are showing promise, they're going to be the ones that are going to benefit immensely from it. Like the fact that you can buy Section 8 homes about, I would say, 1.5 miles from here for like 60 to 90K. The average home in America, it's 5 to 6 times that, 7 times that, right? Like if the homes here just go to 200K, 250K, where are you making that type of return? Now, I'm not saying they're going to, but I'm simply saying, because you just never know where the world's going to go. I'm simply saying, based on that purchase price, why are the homes in where I'm at $60,000, $80,000, $90,000 when most of them are way nicer than the average home in America? It doesn't make sense. It really doesn't. Now, many people, they'll say, look, I'm going to go and I'm going to invest in Section 8 real estate, or I'm going to do this, right? I'm going to hear people online saying, look, I'm going to do this remote. I'm going to buy remote. I'm going to get a realtor. And I just canceled escrow on a deal yesterday. And the reason I canceled was because it was a duplex. And I spoke to the tenant and I said, oh, how long have you lived here? You always want to speak to the tenant. You want to speak to them and find out what's going on with the property, because the owner's not going to tell you. And the inspector, they don't want to kill the real estate deal. They'll be like, oh yeah, the house is good, everything's fine. Everything's fine. They're just going to yes you to death, because if they kill the deal, the buyer's agent's not going to refer them any more future inspections. So they're like, yeah, it's okay, everything's good. Start speaking with the tenant. The tenant's like, oh yeah, we've had 3 property managers the last 4 years. I'm like, well, that's a red flag. Why? Oh, you know, and they basically kind of alluded to problems with the other unit, and the other unit was 3 bedrooms. It was advertised as 1 bathroom, but the reality is the sun porch was illegally converted into a bathroom. It was very ghetto. And for you to access the basement, you had to go through the bathroom, and the only bathroom was right up the kitchen. So everyone upstairs would have to come down, shower, and walk by with a towel past the people in the kitchen. I was telling the realtor, I'm like, this is the bottom of the barrel tenant. You know, we want good properties in great areas at good prices. That's what we want. Like, we want to get into the right area, right price, and have a selection of tenants that we want to work with. If you were to buy that deal remote, you would have gotten smoked, absolutely crushed. The only way in which anything really works out with business is if you're in it 110%, or you're with somebody that you trust, but that person has to be on the ground and doing it, just with anything in general. I heard an old interview. Look at this home. That's so beautiful. An old interview with Floyd Mayweather. This is like 15 years old or something, 12 years old. And this journalist was like scolding him, saying, oh yeah, you know, something about, you know, he wasn't fighting as often as he should, or blah, blah. And he's like, look, you're a man of many things and a master at nothing. That's what he said to him. And then, and Floyd Mayweather's thing was like, oh yeah, you do all these things, but you don't really do anything 110%. I do one thing and I do it well. That's what I do. And he's like, I'm gonna go pick up my 80 million bucks in my next fight. And he went on and continued talking about it. But the point of it was, with this changing world, the ones that are really gonna benefit are the ones that are doing the research in their own industry and that are going 110% in the right angle, right? Those are gonna be the ones that are gonna benefit, not the ones that are like, oh yeah, I'm gonna do this a little bit and do that a little bit. Those people don't generally win. And look, I mean, look at this neighborhood. Look at this. We got the river crossing right through the golf course. Look at these homes. $500,000? You live there for $3,100, $4,000 a month? Like, you're not doing that anywhere else. And so my prediction, Section 8 is going to explode. Drug rehab homes, sobriety living is going to get extremely popular the next couple of years. We're going to see a lot more land investment. We're going to see major investments in climate and everything around it. We're going to see all of these industries just get completely flipped on their head. And many people think, okay, well, that might happen in a year, 2 years, 3 years. That was happening yesterday. We're living through it in 2025 and 2026. The investors that are going to make out like bandits are going to be the ones that are going 100% in on one thing and not getting distracted and not getting shiny object syndrome and looking at other things. A lot of people online will say, oh, everything is over, it's done. Look, at the end of the day, there's always going to be winners and losers. That's it. There's always going to be winners and losers. You think the rich are going to lose? The rich own the assets. The rich are just going to continue winning. Look at that house. The rich are going to continue winning. That's what's going to happen. The middle class is going to end up getting completely dissolved, and they're going to be basically eating from the hands of the rich, like, you know, like a bird eating out of, you know, one's hand. That's the sad reality of where this country is going. And I wish it wasn't the case. I really do. But this is what's going to likely happen. You look at this credit card delinquency, this default situation. A lot of people also think that what happens next week is going to change everything. I just have one question. How? Will oil prices really shift everything? Americans' jobs have never been less secure. Americans' debt has never been worse. People have never been in a worse situation. One person stepping in, how can they look at what countries are doing? They're de-dollarizing. You look at our policies, look at everything that was already signed into law. with, you know, all these different acts that are hundreds of billions of dollars. Look at all the money flowing everywhere. Look at everything. You think that one person's going to step in and just wave some like wand and solve it all? I don't think so. I don't think so at all. Stanley Druckenmiller, founder of Duke Capital Management, he essentially bankrupted the Bank of England in 1992, made $1 billion overnight. He said it doesn't matter who gets elected. It does not matter at all, because we're going one way and one way only. Interest rates are going to go up, and America's in very, very, very big trouble. Now, when I say interest rates, I'm not talking about the Fed funds rate. See, some people say, oh, talking about the Fed. I'm talking about consumer interest, the interest rates that actually matter. What you pay for in a credit card, what I pay for in a credit card, what you pay for in a mortgage, what I pay, all of these things where consumers actually pay. That's what matters. He's saying it's going up. So you think about it. If we're in this inflationary problem with a struggling job market where consumers are tapped out, who's going to win? It's going to be those with investments that are not levered to the gills, where they can kind of pivot and move. You look at a lot of people that lost money in 2008. I study a lot of these people and say like, oh, why did they lose? What was their big misstep? And one of the big ones was that they built up their entire net worth based around artificial appreciation in their mind of what they thought their homes were worth, and they were borrowing against these fake numbers. And the same thing's happening right now. People look at their homes and they say, my home's worth $500,000. I can take out a $400,000 loan, 80% LTV, no problem. I can do it, right? And then the market changes. Market drops 30%. Now you're underwater 16%, 18%, because the 10% that you're already underwater plus the cost of sale, 5% for realtor fees, 3% for closing costs, escrow and title, you're out. It's done, right? People aren't going to strike a check for 30, 40, 50, 60K to leave their home. So just give the keys back. Except that happens across millions of homes. The other big loss is that, they can't collect rents. People lost their jobs and, they're out of luck. But if you're buying deals that are, let's just say, $80,000 Section 8 houses, and you're buying them for 50 or 60 or 70, and you're putting 20K down, and you have $50,000 mortgage on it, and your mortgage, taxes, and insurance are $400 a month, saying that you're not gonna be able to rent that house out for $800, $1,000 a month, odds of that are very, very, very slim. Section 8 alone is paying $1,350 to $1,600 a month on those homes. So you start to connect the dots. The odds of losing on certain deals is a lot greater than on others. And understanding risk and understanding your strengths and weaknesses is extremely, extremely important in this ever-changing world. Look at this. Absolutely beautiful. The house that you get here, if you wanted to look to buy a home for like $1 million or $1.5 million, it would look like it's like a museum, like an absolute museum. So that's my prediction. We're going to see a lot of cash and capital flowing from places like California and New York the next couple of years. A lot of investors looking to invest, and I'm betting Section 8 is going to get a lot more popular. Not a little bit, a lot more popular as people start looking for ways in which they can protect themselves. A lot of people are like, you know what do I do with 200 grand? Put it in a bank account and make 4%? Okay, make $800 a month, $700 a month, that's fine. But if inflation, real inflation, is 40, 50% of, over the last 5 years, how much did you lose, right? It's where you invest your money, how you invest your money, and what your approach is that's going to mean everything. The last thing you want to do is follow the masses on the way to the slaughterhouse, which is, I think, what a lot of people are going to be doing over the next couple of years. It's not late though. You don't need $1 million. 20, 30K get you started. Let's have a conversation below, and if you'd like to fix your credit, we'd love to help you. At my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items in your credit report, go to GreatCreditFast.com, click the link in the description just below this video, schedule a free call tomorrow. Catch you next video.